All right, welcome everybody. Thanks so much for joining us today. This is Growing Wealth Tax Deferred or Tax Free with your self-directed IRA. My name is Sean McKay, and this is an American IRA presentation. So as we kind of portrayed in the marketing materials, this is our fundamentals presentation where we're going to talk about just kind of these basic building blocks for these self-directed IRAs and 401ks so that we can kind of build our knowledge from there in terms of creative deal structures, different ways to think about the utilization for these accounts. So at American IRA, we are the record keeper for your retirement account. We are fully integrated, meaning we have the same ownership group for American IRA, the administration company, as we do for New Vision Trust Company, which is our custodian, that's our parent company. And so really what that means to you as a client is that we get to pass on exceptionally low fees because we are fully integrated. We also are able to receive information from the State Banking Commission, the regulatory bodies, and pass that along through the layers of our company so that we can provide as much up-to-date information as possible for you as the client. And so regardless of where you're physically located or where you're looking to invest, we can administer those accounts and those assets for you. So you can be in the Midwest, the West Coast, the Northeast, the Southwest, the Southeast, all sorts of places in between. And we have clients nationwide. So I appreciate you taking time out of your schedule to spend a little bit of time with us. Now, when you're comparing self-directed providers, understandably, the cost associated with that relationship is going to be a big factor for you as a client. And so we have a unique fee schedule, one in which we're not basing our annual fee on the size of the account, so the value or the number of assets that we administer. It is just simply a flat, very low annual fee. And so for our IRA product, the annual fee is $285 a year. So regardless of how big you grow that account or how many assets you end up accumulating, your IRA annual will still be $285 a year. And as you can see from this chart, as you grow and as your portfolio expands, that becomes a bigger and bigger difference to your bottom line. And along with that phenomenal fee schedule, we also have a terrific operations team that will be servicing your account. And so the reviews that we have on all the different platforms were very highly rated. And for any of you listening that have taken time out of your schedule to write a review, we certainly appreciate that. And so again, I can say whatever I want as a team member at American IRA, but it's certainly our clients that speak so highly of us that will obviously be much more impactful for you. So when we talk about these self-directed retirement accounts, really what we talk a lot about at American IRA is that we're essentially in the awareness game. We want to make the general public aware of all of the opportunities that they have available to them with their IRAs and their 401ks. And so certainly many of us are familiar with kind of, we'll call them the typical investment products that are available to us. So for just kind of storing our cash, we might be putting it into products like CDs or money markets. As we go up the risk scale and we're looking to get an actual return on our investment, we might be looking at bonds or individual stocks or mutual funds. And so again, we're largely aware of these opportunities that are available to us. But today we're going to unpack some of the lesser known ideas around how to invest our IRAs and 401ks. And hopefully that will be useful to you as you're kind of thinking about how to structure your portfolio. Now, I don't think there's really any argument to be made here against this idea that IRAs and 401ks have historically been a valuable part of the portfolio. But as we kind of transition to this new era, this new economy, retirement accounts are so incredibly necessary to our financial well-being and to planning for our retirement years. Because when you think about it, previous generations had these phenomenal pension plans to lean on. You'd work for a company for multiple decades, you'd retire, and they would pay you a substantial sum of money, usually each month or each quarter in your retirement years. That's largely completely gone away. So we have to remove that leg of the table. The next leg is Social Security. And it is beyond my pay grade to definitively forecast what Social Security is going to look like. But what we do know, what is common information that we can all extract from different data pools, is that there are more people pulling from Social Security. There's more money leaving Social Security than there is money being paid into Social Security. This isn't a temporary blip because of the pandemic world that we're all kind of working through at this point. This was pre-pandemic. This reality was in place. So at the very beginning of 2020, this data started coming out before there were any sort of shutdowns with businesses, with economies, and with kind of the reality that we've all been dealing with for the last almost 2 years now. And so ultimately, when we remove pension plans and Social Securities, really what that leaves us with is personal investments and our retirement accounts. And so personal investments are fantastic. We see business owners, we see investors that create great wealth outside of their retirement accounts. The benefit, however, with retirement accounts is that we're able to largely make many of the same investments, but we can do it in a far more tax efficient way than we can if we're selling an asset in our personal name versus selling assets out of our retirement account. So it's a much more tax efficient strategy. So again, this isn't a either or game. This is a let's do both things, right? So we're going to move forward with our personal investments, but we're also going to work to build up our retirement accounts as well. So when we define out a self-directed retirement account, there's a few things we need to lean on. So the first is, as the name indicates, this is an account where you as the account holder are directing the investments for your portfolio. So at American IRA, we are not suggesting investment opportunities for you. You are out there certainly leaning on tax and legal professionals to help you with certain types of analytics and points of tax and legal guidance. But ultimately, American IRA is simply the record keeper for your retirement account. So it's truly self-directed. The second aspect is when we're talking about a truly self-directed retirement account, we're speaking about one in which, again, you can still invest in the stock market with us at American IRA. You can buy your stocks, your bonds, your mutual funds. But the primary reason why clients create a relationship with us is that they're looking to purchase alternative assets. So that could be the ownership of real estate, that could be creating debt instruments, that could be investing in privately held companies. Other assets such as digital assets or precious metals are also available to us. Now, the great thing about these self-directed accounts is that really any retirement account can be self-directed. So right off the bat, all IRAs are eligible at any point in time to be moved over to a firm like American IRA. So that could be your Roths, your traditionals, your SEPs, or your simple IRAs. Now, if you have an employer-sponsored plan, like a 401k, a 403b, or a thrift savings plan, if it is with your current employer, you'll need to ask usually someone in the human resources department what the company policy is on doing any sort of a rollover to another firm or sometimes an in-service distribution. So you'll need to get a little bit of guidance if it's a 401k with your current employer. Now, if it's an old employer-sponsored plan, 401ks, 403bs, or thrift savings plans, you absolutely have the ability to roll over those accounts to a firm like American IRA. And so ultimately, all of these accounts have complete functionality with making any of the investments that we're going to talk about today. Also keep in mind the retirement accounts themselves have the identical rules associated with them, whether they're quote unquote self-directed accounts or not. So your Roth IRA with Schwab or Vanguard has the same contribution limits, the same distribution rules when it becomes a quote unquote self-directed Roth with us at American IRA. The other thing to note here is that this is not an all or nothing type of movement. You might elect to move just a portion of your traditional or rollover IRA to us. You don't have to move your entire account balance. So you can have multiple financial services relationships. And so the way the IRS code is written is it tells us what we cannot invest in. So this is by no means a complete list. These are just some of the more typical investments we're seeing on a daily basis. So as we look at real estate, any type of physical real estate can be purchased with your retirement account. So that can be raw land, condos, townhomes, single family homes, any sort of commercial building. So that can be retail, industrial, that can be apartment complexes. Your retirement account can directly own those assets. Now, many times when we're speaking about larger assets, like a commercial real estate investment, it could be a group of investors coming together, usually through a single purpose LLC. And so with that LLC, your retirement account could be one of multiple members of that LLC. There will be an individual, not a retirement account, but an individual that will be the manager for that LLC that's kind of steering that entity through the acquisition of the asset. Usually they're involved in kind of overseeing the asset itself. And so there's a lot of different structures we can use. You may have also heard about the term checkbook control and ask if that's the service that we provide. It is certainly not a mandatory service for our clients. So you can use the quote unquote checkbook control, which is really just the retirement account, again, being a member of a specially formed LLC. But it is an option for clients that elect to use that. Now, we have other clients that like real estate, but they want to invest in real estate through some kind of different structures. And so sometimes they'll be the bank and they will lend money to other real estate investors and take back a deed of trust or a mortgage. We also have clients that will invest in tax liens or tax deeds. So you're essentially paying for somebody's unpaid property taxes on a property that they own with the expectation of making a return on your investment, because that then creates a new lien for the property, just like a mortgage is a lien on a property. So that's a structure as well. And we're seeing more and more over the years of clients that are investing in privately held companies. So we're all familiar with publicly traded companies on the stock market, but your retirement account can also invest in private companies as well. And so as we dig into the real estate strategies, the key here is that we're making an investment with our retirement account. And so many times that will come in the form of one of these structures that we'll see listed here. So whether it's your retirement account buying a property for rental use, for fix and flip, for wholesaling or having an option on a property, perhaps your retirement account is going to joint venture, essentially, again, partnering with other investors to make an investment, or it is being the bank and it is lending money to investors so that they can buy a rental property or do a fix and flip type of strategy there. And so, as I mentioned earlier, the way the IRS code is written is it tells us we cannot invest in collectibles or life insurance policies. That's really kind of the overall list. So collectibles could be fine wine, it could be artwork, it could be antiques. There are certain coins and vehicles that are deemed to be collectible items. And so those are assets along with life insurance policies that we would not be able to purchase with our retirement account. Now, as we're kind of continuing this list of the no-nos, if you will, there's also the idea of disqualified persons and entities. And so these are the list of people that cannot buy an asset from your retirement account, nor can they sell an asset to your retirement account. They also need to be very careful that they are not providing any sort of services to an asset owned by your retirement account. And we'll unpack that in a moment. But essentially, we start with you as the account holder. You are a disqualified person. Your spouse is as well. So are your lineal family members. So your upline is your parents, grandparents, all the way through your family history. Your downline is your children, grandchildren, all the way down that lineage as well. The downline also includes spouses. So your child spouse, your grandchild spouse, great-grandchild spouse, et cetera, et cetera. Also, entities that all of these individuals own or control are considered disqualified entities. So an easy example would be your parents would like to buy a property from your retirement account, and you realize that that is a prohibited transaction. And so your parents say, no problem, we'll have our LLC buy a property from your retirement account. because the parents own and control that LLC is also a disqualified entity from buying the property from your retirement account or providing services. So services is going to be professional services, such as being the realtor on the transaction, the closing attorney or escrow agent, depending upon the state that you're doing the real estate closing. And then a big one is going to be the sweat equity. So those individuals, as well as companies that they own or control, so it can be construction companies, et cetera, cannot provide the sweat equity to a property owned by your retirement account. So I want to make sure we're kind of aware of that. We also need to be aware that when a retirement account is going to be borrowing money, so the retirement account doesn't always have to pay cash for assets, it can borrow money. We want to make sure that as the account holder, we are not personally guaranteeing the debt that our retirement account is using to, let's say, buy a rental property. We also want to make sure, especially as you're entering your self-directed kind of life here, that you are making sure that paperwork flows through our office so that we can sign documentation on behalf of your retirement account, whether it's the purchase of an asset, the sale of an asset, et cetera, et cetera. So we want to make sure that we have our accounts opened and funded before we go out there looking for our investments. So that, again, all the paperwork, all the flow of monies goes in and out of our account. So as we kind of look at this process to make an investment, what you'll find is that generally speaking, it's the same whether you're buying mutual funds or you're buying a piece of real estate with your self-directed account. There will be a couple of kind of small differences in the overall process though. So with either scenario, the first thing you must do is open and fund your account with whomever it may be. So we'll assume you're going to create a account with Schwab for your equities trading, and then you're going to open an American IRA account for your self-directed investments. So again, in both scenarios, we open and fund the account. The next concept is to identify the investments for our portfolio. So we're doing whatever research we want to do to find the right fit for an asset. And then ultimately, the third phase is working with your financial services provider for the acquisition of that asset. Now, here's where it is different. So Schwab, like many of the equities platforms these days, you can log in and in a very short period of time, usually within a couple of minutes, you can make the investment and you can buy 100 shares of an index fund, a mutual fund, individual stock, et cetera. In the self-directed world, it is a longer process just simply due to the assets that your retirement account is going to acquire. So again, if your retirement account is buying a rental property, you're submitting an offer to the seller. There might be some back and forth negotiating. Ultimately, that closing is going to get set up with a closing attorney. They have to run title. They have to create all of the closing documents for the investment itself. And so ultimately, that usually takes a few weeks for that entire process to transpire. The end result, however, is the same. Your retirement account can own, again, 100 shares of an index fund, or your retirement account can directly own a rental property in the self-directed world. So for some of you that are just kind of getting up to speed with the self-directed world, there can sometimes be a little bit of frustration that your current relationships haven't spoken to you about all of the investment opportunities available to you. Now, the reality is that you probably have some great relationships, but they have a kind of world of products that they can assist you with. So they can help you with stocks, bonds, mutual funds, CDs, money markets. Maybe they have presented to you other ideas such as buying annuities, things of that nature. Those are products that they can assist you with as a salesperson in the financial services industry. And so there's nothing wrong with that. That is just their job in this overall space. At American IRA, we are not licensed to advise, nor is any self-directed provider licensed to advise you on how you should invest your money. And so again, because it is self-directed, we're simply giving you a platform of investments that can be made. And again, since we're simply in the awareness game, we're making you aware of it, but we're not trying to steer you towards any particular investment. The advisors cannot speak to you about these alternative assets because these are not products that they can make a commission, or it's a scenario where their firm is not structured to assist you with the acquisition of an asset of, let's say, a rental property. So you can have a great advisor, but you go to your advisor and say, I want to buy a rental property. Their company is not structured in a way where they're going to be able to help you so that they can essentially help you with the acquisition and the ongoing record keeping for that asset. So now we're going to go into just a very basic fix and flip example. And so the key here again is, before you identify a property, please make sure your account is established and funded. And then ultimately, when you're looking to make an offer on a property, we'll be signing the documents for the offer to purchase, so that it is in fact your retirement account going on title for ownership of the asset. And so in this example, Steve is going to locate a property that his retirement account is going to purchase for $150,000. So Steve is going to make an all cash purchase here. Steve's IRA is also going to pay $10,000 to handymen, contractors, whomever it may be, to fix the property up. So very light rehab, paint and carpet essentially. And while the property is essentially vacant, there will probably be some sort of holding costs associated with it. So it could be proration of taxes, insurance, there's going to be utilities that will need to be paid. And so the retirement account will pay those bills, because again, it is the owner of the property. So buyer comes along and purchases the property after it's kind of spiffed up for $195,000 from Steve's IRA, and the proceeds from the sale flow directly back to the retirement account. So whatever that profit is, that flows back to, in this case, the IRA. So the articulation here is not so much in terms of, hey, you can make phenomenal profit. It's just whatever that profit may be will flow back to the retirement account, because the retirement account is the owner of the asset. It pays any and all expenses. Conversely, it receives any and all benefit from cash flow or from net profit from the sale of the property. And so any of you that are looking to move forward with opening an account, please feel free to reach out to us. My email is Sean, SEAN, at AmericanIRA.com. Our website is AmericanIRA.com, and our local number is 828-257-4949.